And I will be discussing about current market conditions. The thumbnail itself says that the end of the bull market. So is it that case? We'll be discussing that in this today's session. A few months back, I think 2 months back, we made a special video and we took a special session on it and calling it as last phase of bull run. In fact, we had anticipated that the current thing which is playing out can play out in that way, and we might see that. So we saw a small ferocious bull run. I think what I thought was 2 3 months it might continue, but we saw that small ferocious bull run for 15-20 day period, and after that we have seen small caps getting beaten down. In fact, I updated about that don't expect and don't expect that to play out the last phase of bull run completely, because this is the perfect time. If you have made money in past 4 years, this is perfect time to protect your profits. That were my words. In fact, I was repeatedly saying that precious metals and their miners, and in fact, at some point of time I also said that if you have cut down the stocks, do not reinvest that in markets, because market will give enough time. That were my words. And in fact, we have seen that similar things got getting playing away. And in fact, today we have seen a big breakdown, a stage 4 breakdown. I'll be talking about that, what is stage analysis in this session. We have seen a stage 4 breakdown, at least in small and mid caps, not in large cap, not in Nifty, but in small and mid caps, we have clearly seen a stage 4 breakdown. So let us go forward and understand. So, what is that we are going to learn in this today's session? What are the things which we are going to discuss? First is we'll discuss about what is the difference between correction, fall, and a bear market. So, most of the people are not aware about this concept. So, we will discuss about this. What is the difference exactly between the correction, fall, and a bear market? We'll discuss about the market cycles in this session. Then we'll be discuss about where are we in this current market in the current market cycle. We'll be discussing about current market situation, what are the valuations of small and mid caps, etc. And slowdown, that is the talk of the town, and that talk has just started. And we'll see a similar case in past when the slowdown was the talk of the town. What happened to the markets? So we'll, in fact, I'll open a blog where when I wrote it in 2018 times. I'll be reading that blog in front of you all. So what were the conditions? What exactly happens when the slowdown happens? The slowdown talks have just started, and we are not even in the slowdown. But what it has made in past, we'll be discussing about that. Then we'll be discussing about the case of large caps, which is Nifty, mid cap, Nifty mid cap, small cap indices with stage analysis. And at last, we'll talk about how to take stock specific decisions, where I'll be discussing about how to segregate the stocks between the circle of competence stocks, non-circle of competence stocks, stage analysis, and relative valuations and valuation perspective. So we are going to discuss everything in this today's session. So first thing first, let us understand what is correction, fall, on a bear market. So at the first time, if you are a market participant, because more than 70-80% of the market participants have joined after COVID, and most of the people don't know the difference. So let me just tell you about the difference. So 5 to 10% is called as a correction. 5 to 10%, if anything it happens, it is called as a correction. 10 to 20% is called as a fall. And beyond 20% in your equity curve, in your portfolio value, if it goes, it is called as a bear market. So if you are in markets, you should be worried about bear market, not correction and fall. Because if you are in equity markets, if you are in equity markets and if you really want to compound your capital, you cannot stay away from corrections and falls, because you'll be seeing that it is a behavioral aspect. Most of the people are not able to even digest 10-15% kind of a fall, even 20% kind of a fall. If you are not able to digest such fall, at least your equity allocation should be very less. Like out of 100 rupees of your equity net worth, you should be only invested 10-20 rupees in your equity. Otherwise, every time you'll be always worried, and it will create a panic in your mind. And it is must, because uh, if you cannot see a 20% fall in your portfolio value without panicking, you're not made for equities. That is what is clearly meant. And it is very much important to understand that, because even see even largest of the largest investor, a lot of people say that largest of the largest investor, they are also seen 20% fall in their portfolio values. Like Ashish Kacholia, that was 1 month back only, he saw a 20% fall in his portfolio. So that is quite normal. So it is behavioral aspect, and if that behavioral aspect is not what we say is not understood properly, you're not meant for market. And that is the reason why I'm explaining it, that correction, fall, and a bear market. So you should be worried about, somewhat worried about fall, but more about worried about the bear market. And that is why we are we are taking this session today, because the markets might be anywhere between a fall and a bear market, or we might have already entered bear. We don't know, but we will analyze that. But what exactly risk management needs to be done in that stage, we'll be talking about that. Then let us talk about the market cycles. I talked about correction, fall, and a bear market. Everyone clear about correction, fall, and a bear market? Please comment in the comment box. Everyone clear? Comment AC in the comment box if you are clear about this correction, fall, and a bear market. Because every now and then these things will keep on happening in the market. And if you want to be a market participant, you have to go through this, and you have to fix it in your mind, that what is the correction, fall, and a bear market. Because it is a corrections and falls are the part and parcel of your compounding journey, whatever you are doing. So let us go forward and understand about the market cycles and the emotion cycles. So market cycles, see, the most super successful investor are the investors who understands the market cycles. A lot of people say that buy the dip, buy the dip, buy the dip. Not all the dips are worth buying. And the current dip which we are seeing, it's certainly not buying. And why I'm saying so is because I've been saying over the past 4 years, during all the dips, I've been saying buy the dip, buy the dip. But this time I'm not saying that. Why? Because it is because of market cycles. Because not all dips are worth buying. Have you all got my messages on? I am saying that during every downturn, I've been constructive and positive about the equities and saying that this is the perfect time to add up to the equities. How many of you have seen my message talking about this? Please comment in the comment box. How many of you have seen my message each time? And not only in 6 months or 1 year. I've been doing this for the past 4 or 5 years. Every time during the every big opportunity where the markets fell like 10-12%, I gave this confidence that comment as yes in the comment box if you have seen that. So that was the time, and that is the reason why I said that it is because of market cycles. Because understand the market cycles, the market cycles rings means moves in a pendulum way. Moves in a pendulum way. It swings from a extreme greed to extreme fear, and from extreme fear to extreme greed. And this greed and fear cycle, if we understand that, we'll be able to understand and make the maximum out of it, and decide when to act and when not to. And today, if we see, this is the market cycle. The Because 2018-19 or even in 2020, we were in this cycle where a lot of investors said that get me out. But the super successful investors recognized that as a point of maximum financial opportunity. COVID was such opportunity, and March 2023 was such opportunity where a lot of people in small caps were crying like anything. But that was the maximum financial opportunity. But in the recent times, I said that we are already near euphoria zone and we might enter the period of maximum financial risk in few days. And just after the session which I took it in 20th September, within few days we entered that where the small ferocious bull run started in the at the last stage in broking stocks and all, because that is when we entered into maximum financial risk. And that is the reason. And later on, when the small correction happened, there was a denial from investors that people were saying that it will bounce back and all those things. But we have already reached this. Maybe we have reached here or here. We maybe even today people might be denying the fact. But this is the stage where we are in, or maybe we are at anxiety level. So because we may be anywhere between here. And this is not a period where I say that you go and hunt for the opportunities, because not any taking any action is also a action. A lot of people all the time want action. And I have repeatedly said this is not a newbie friendly market. Newbies stay away from this market. This is not an investors market. I have been talking about this from the past 2 months. And there is a long way to go where we will see that and say that there is a point of maximum financial opportunity. And maybe 6 months or 8 months down the line, we might say that we have reached, and it takes time. It takes time for the time correction to play out. So let us go forward and understand. So as I said that first we'll discuss about these differences, then market cycles. And where we are in current market cycle, we have already discussed that. Let us discuss about current market situations, mid valuations, because most of the people who are in this community are not a large cap investors. Most of them are invested into small and mid caps. Am I right? Please comment in the comment box. Are you all SMID investor? Comment as SMID if you are a small and mid cap investor. SMID. I think most of the investors are SMID investors. Yeah. So because most of the large caps are owned by large institutions, and most of the retail investors or investors, Indian investors, are invested in small and mid caps. And why it is important, and I've been talking about it. I posted it about it on Telegram also. Let us look at that. So this is the chart which is prepared by DSP investment managers, and I just posted it in September also. We discussed about this case. Before 2008, the fall, the index, mid index, made a PE, median trailing 12 months PE of 20x. 20x times it was trading. In 2017, before the fall, it was trading at 29 times. Currently, it is at 44 times, and it is 2x higher than the 2007. A lot of some people might argue that yes, the companies which were in mid in 2007, they have become large caps, and because of that the valuations might be high. But yes, because of that the valuations might be high, but not quote, it should not quote at 44x. It should be quoting at, let us say, 35, 38, something like that. For that, considering that fact, it should be trading at 35, but it is quoting at 44, which means excessive froth. And I've been talking about it on a regular basis that there is a lot of froth in mid and small caps, and that froth has been, first it was getting cleared, but now the mean reversion is imminent. We are going to see that mean reversion playing out, and this is highly worrisome. This is highly worrisome, and there might be a few investors who have just started investing. For such people, it becomes really big question. What should I do? And the real answer for that is just do nothing. Means don't invest more into market. Just stay put. You'll get best of the best opportunities. There is no need of hurry, because we are not at a maximum financial opportunity. We are near the maximum financial risk. So please understand that. One more thing is I am talking about the slowdown. And this is the data by DSP investment managers only. We are we have just started slowing down from the economic front. When I took the session on last phase of bull run, a lot of people were talking about this, that how can we enter, how can the bull market end? The economy is in very good shape. That is the words which I was getting, and I said that, see, economy might be getting might be in a better shape, good shape, but the stock markets are one step ahead than the economy. And during that time, this number was not present. And this number came on 31st August, the 31st October 2024 in the latest issue of Netra by DSP Investment Manager. And that is what they are saying. See, the rural wage growth has been very at a very slow pace. Second thing which which I'm looking at here is the slowdown in the wage bill growth or private sector wage bill growth. One more slowdown where I'm seeing is personal loans, because personal loans shot up like anything. Post COVID, the personal loans shot up like anything. But we are seeing a slowdown there also, because this was spurring the consumption earlier. But we are seeing a slowdown there also. And one more thing is total GST collections. Total GST collections have fallen down from September 2022 to a low level. And this is the first time where the slowing signals have came. Petroleum products consumption. Petroleum products is a clean indicator where it can show the economic prosperity or a slowdown. And we are seeing a slowdown there. Petroleum product consumption. Machinery goods imports, there also we are seeing a slowdown, and it might enter into, and this is the slowdown in the growth. The actual slowdown might enter, come at a later stage. This is the slowdown in the growth rates. This is also slowdown in the growth rate. The actual slowdown we might see that happening 6 months or 8 months later. And when this number is slowing down, and in fact, even today we have seen that the slowdown is there. The slowdown has just started. And along with that, we should have seen the softness in the inflation. But today, what we have seen is just yesterday, the reason for today's fall in the market is inflation numbers. And people were expecting that the inflation numbers will come soft and RBI will cut the interest rates. But now that is not the case. Why? Because inflation numbers are high now, and RBI may not be cutting rates anytime soon. Because unless and until inflation number is under control, we might not see that. Yes, food inflation is still in a better shape, but overall inflation number is there. If the rate cut happens, we might see a counter rally. Counter rally, usually what happens is, because it is indexes are oversold, but there might be a dead cat bounce which might happen in markets. But we must understand the structural thing which is going there in the markets, and this is where we are. And I've been talking about stage analysis. So every stock or any index goes through this stage analysis. And why we are talking about this stage analysis today in the index, especially in small and mid caps, is because in small cap index, it has entered into stage 4 downtrend. Small cap index has entered into stage 4 downtrend. The best opportunity when the index itself is at stage 1 after a downtrend, or stage 1 consolidation after a downtrend, that is the best way to spot for quality stocks and quality investments. And after that, whenever it enters into stage 2, what is stage 2? Whenever the price is above 30-week moving average, 30-week moving average for the index, that is when the uptrend starts. I'll talk about that on the charts also. The uptrend start, that is the best time for buying for a trader, but an investor can buy even here. And after that, there is a stage 2 uptrend, and after that, there is a distribution. And this is I took this last phase of bull run session when I was seeing that there is a distribution phase happening in the markets. And even this downtrend was not started. And that is the time when I took that session, last phase of bull run, because markets were in distribution phase. And in this phase, usually selective rallies happens. And I have been talking about that. Selective rallies have been happening in the past 2, 3 months, 4 months. And selective rallies were keep on happening. And for the first time, it has given the stage 4 downtrend. I'll show that on the charts. What is mean by stage analysis? And you must follow this stage analysis. You can Google it. Stage analysis by Steen Winston. So I'm just opening the charts for small cap index first. So if you are an investor into the markets, this is what you should follow. Because a lot of people say you cannot be a blind investor. Yes, unless and until if you are, even if you are doing a SIP in mutual funds, SIP might continue. Do not stop. A lot of people reduce their SIPs. Do not reduce your SIP. You can continue with the SIP, but whatever you have accumulated, you need to protect that. And it is very much important to protect whatever you have accumulated. We have seen that someone who is doing the SIP, who has done the SIP for 10, 15 years, he saw his capital coming at cost during the COVID times. So what is the benefit? What is the use of doing the SIP for 10, 15 years long? Have you seen that? How many of you seen that during the COVID period, your capital amount and profit came very close, even if you were doing SIP for 8, 7, 8 years? How many of you seen that? Comment in the comment box. How many of you seen that you were doing this SIP for 5, 7 years and your capital amount and profit amount was means came very closer. So Bhushan is saying that I saw that in mutual fund, my capital and principal got eroded during COVID after 8 year SIP. So it is important. It is important for you to understand the market trends, and I will be showing you that. There is a within the if you go to the trading view within the indicators, there is a indicator called as EMA, exponential moving average. If you go there and if you just plot 30, and if you just select the time frame as week, so it will get plotted 30-week moving average. And 30-week moving average simply tells you about the entry and exit points in the markets. And I have just posted small cap index in even before this breakdown happened. Few days back only, I think 1.5 months back only, I clearly said that completely come out of your small and mid cap mutual funds. Did I say that? Did you follow that? Please comment in the comment box if you have followed that. Completely came out of small and mid cap mutual funds. How many of you followed that? Please comment in the comment box. Completely came out of small and mid caps. Even because even before this breakdown happens, the actual breakdown has happened today, but that anticipation was earlier, and that is the reason why I told earlier. Now, this is the 30-week moving average. So what happens is, see, after a downtrend, whenever the uptrend starts, whenever the indices goes above 30-week moving average, indices go above 30-week moving average, you can aggressively add more if you are already owning, or you can aggressively start SIP whenever the indices move above the 30-week moving average. After a downtrend, you can double your triple your SIPs, even booster SIPs you can do. But whenever it closes below this, see here, whenever for the first time it was in uptrend, but for the first time, if you see here, even in the indexes, this new high was made, but here this high was earlier than this high, lower than this high. So what it means is now the index is not in uptrend at least. So it was clear signal that we are in a distribution phase because this high didn't cross this earlier highs. So it was very clear that we were in a distribution phase. Now, if that fall happened and now the distribution phase started, and this distribution phase, in fact, here until here, if you have seen somebody who had anticipated this, the small cap indexes fell like 35% from the recent top, 26%. BSE 250 small cap index fell down 26% from the top. And after that, it was in the distribution phase only. Once again, when the indexes went up along with the new high, so here it was no need, at least exit some of the best profit booking positions. That is what was suggested. But valuations were still comfortable. Valuations were not much worried for at that point of time. But today, if you see here, even if you see earlier until now, because I took a session in March 2023 saying that the small cap is the best place to be. And after that, we have seen a ferocious bull run in small caps itself moving up 100% in just 15 months. Earlier to this is 30-week moving average line. Earlier to this, every time it touched and went near 30-week moving average line and once again bounced up. But for the first time here, if you see here, this also here on a weekly closing basis, it went down, but it again bounced up. It went down, again bounced up. It went down, but again bounced up. Here for the first time, if you see, and here for the first time, exactly the weekend confirmation will happen on the weekend. But if you see here, after falling down to 30-week moving average, there was a quick bounce. And after that, once again, we are seeing a fall. And such situation didn't happen earlier. Here, after a fall on the second day onwards, we started seeing that going up. But for this time, if I plot this on daily charts, it will be very clear. If you see here, small cap, it fell down, then it rose up, again it touched that low, but I once again started going up. But it never closed below this 30-week moving average line earlier. Here, it touched this 30-week moving average lines, went up, but it is clearly closing down. Here, if you see on a daily close basis, in past, it has never closed down below 30-week moving average line. So what it says that stage 4 downtrend has started. Are you seeing a stage 4 downtrend here in the small cap index? Please comment as S4 if you are able to see stage 4 downtrend clearly confirming on daily charts. And you don't have to wait for the weekly charts because it is very clear. On daily charts, it never ever happened that it closed below the stage 4. Even if I look at the mid cap, SME mid cap, for the first time, mid cap index has closed below 30-week moving average line. What it means is we have entered the stage 4 downtrend in the mid cap already. Now, even if I see it in small, large mid cap, no, let us look at large cap, not large mid cap. Here also, even if you see, earlier also it closed below, but it moved up. But here in the case of Nifty, I will also look at 200-day moving average because safest thing what is there in the markets is 200-day moving average. Is Nifty because there is nothing much safer than Nifty. But the biggest money is made in small and mid caps. But you need to understand when to exit that also. And this is 200-day exponential moving average. So in the case of Nifty, I will not look at 30-week moving average. I will look at 200-day exponential moving average. In the case of Nifty, in the case of large cap, so there might be a case where small and mid caps will keep on correcting and we might see a bounce back in large caps. But what happens is, even if small bounce happens in small and mid caps, it is a dead cat bounce. And you don't have to be, you cannot rely on that dead cat bounce because it will confuse you. And in front of my eyes, if I'm seeing that weakness, And even if I want to wait, I can wait for few days, but in small and mid caps, but I cannot delay. In the case of Nifty, if you see, in the case of Nifty 200-day moving average, it has taken support multiple times. So what we might see a bounce in Nifty. We might see a bounce in large cap. But expecting that in small and mid cap is a foolish thing to do. Because if even if you are equity investor, आप पूरी तरीके से मार्केट से बाहर होना चाहते हैं तो then it's a different part. But at least large cap, and a large cap has got sold because of FII selling. So even if you see here on all the charts, so we might see a small bounce, but we are already in the stage where one needs to decide about coming out of the market, not investing in the market. And this fall, because every fall I have talked about that buy the dip, but this fall I'm not going to buy the dip, even in the large caps, because we are already at a maximum financial risk. Now, let me just show you how brutal can be a stage 4 downtrend. I'm just opening one blog. I wrote a blog in 2018. So I wrote this blog in October 2018. The fall in small caps and mid caps started in January 2018. And this blog was written in 2018, October, 6 months after the fall had started. And at that point of time, I was not much equipped like what I am today to give the signal and to study all those things and inform the community members about it. But see here, September 2018 was the worst month for Indian stock market in several years. Domestic funds which were booming for last few years had seen a net outflow of 75,000 crores. Today, only FIIs are selling, DIs are not selling. But that time, even there was not much change in the story in 2018 about India growth story, and even today. And DIs sold close to 75,000 in a single month. Not in a single month, in that period. That was huge pain. And DIs were also selling, FIs were also selling. Very clearly, we are in a bear market. Negativity and pessimism are rampant. Stock across sectors and markets are getting beaten down on a daily, weekly, and a monthly basis. And today, what we have seen is we have just seen earlier when we were talking in October, we have seen the stock getting beaten down on daily basis. Today, the weekly confirmation of the index itself might come at the end of the week. We are in between this, but this blog was written in October 2018, where we were talking about daily, weekly, on a monthly basis, the stocks are getting beaten down. There were several examples where the stocks were down 45 to 50% within a month. There were times when DHFL fell 42% in a single day. Yes Bank fell to 32% in the same day. And what happens is whenever there is a bull market, whenever there is an uptrend, you'll see positive news flows flowing in. But whenever the stock market enters into a downtrend, suddenly we'll see a lot of people and lot of economists, lot of news are talking lot negative about the markets, negative story building and all those things. Along with that, negative developments like result session. If you see the result session this year quarter, it has been one of the bad result quarter compared to past many quarters. Have you observed that? Please comment in the comment box. Have you observed that the result session has not been very encouraging compared to the past? How many of you have observed that? And this is just the start. This is just the start. And that time, we were into peak fear. The last week were the worst week in the last 3 years. Fear and panic were highest across the market. The best course of action during such times is to stay calm, and that is not easy. So we were already in the panic zone, and many of the decisions which one should to have taken, they should have taken in January 2018, not in October 2018. October 2018, even if someone is invested, that was the time to stay calm and not to sell the stocks in panic, because already the decision should have taken in January. So, and at the stock market level, there has been collapse in NBFC. This was triggered by ILNFS discovery. So what happens is, whenever there is a bull market, stock prices and promoters have a lot of incentive to manipulate the balance sheets, and all those things keep on happening, and you might be seeing the good numbers. But when the market is also not supporting, promoters also give up, and they somehow, you will see that some of this might be scams, or some of the baddest thing might be happening in next 6 8 months, because there is no incentive for any promoter. And instead of keeping and delaying the some problems, if there are any real problems, those will surface down in the markets, and that usually happens in the various market cycle during the bad times. Even before 2008 fall, what we have seen is, when the markets were already entered into bearish territory, the ILFS during last time, ILFS scam broke out. And prior to that, during 2008, Lehman Brothers and all those things, many bankruptcies came. Even today, we might see over the next 3 4 months, 5 months, many of the bankruptcies happening in the US, because number of bankruptcies are at a very lowest level in US. So that happened. And in fact, we have seen that from my 12 years of experience in the market, I have learned that it is impossible to predict the future, even today, because we anticipated. Even today, if I see that, when I talked about last phase of bull run, I was looking at the recession indicators in US. But FII selling came out of the syllabus, because it is impossible to predict the future, but you can be prepared because of understanding of the market cycles. You at least, some of you might have sit on cash. How many of you people are sitting on cash? Um, I'm just launching a poll. Please comment in the comment box. How many of you were prepared when I took that last phase of bull run? And it has really helped you to sit on cash, because earlier it was very difficult to analyze that, and I was not predicting anything. I was just telling about the market cycles earlier also, and even today I'm talking about the market cycles. Nobody can predict the future, but you can be ready if you understand the market cycles. I think I want this poll from everyone. 99 people are joining this workshop, joining this session. I am seeing the comment from only 39 40 people. So I can see that at least 30% people, more than 30%, more than 32% people are sitting on more than 50% cash. That is amazing. That is amazing. 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 64% people are less than 5 years. Great. 80% of the people are saying that I have followed the last phase of bull run with conviction, with full conviction. Thank you, everyone. And hope it helped you. Hope it helped everyone. Great. Now, for the people, there are, I think, 11% people are saying that they didn't knew about it. Yeah. So let me just show you how exactly bad it was during the last phase. I'm just showing you that also. During the last phase, I'll show you, like, I was tracking few of the stocks and how bad it was during the last phase. So I was trading in Everest Kanto cylinders, and I exited this Everest Kanto cylinders whenever the similar situations was playing out there. And the Everest Kanto cylinders, without nothing much change in the fundamentals, kept on sliding down. The stock fell down from 49 rupees and it fell down till 10 rupees in the COVID period, COVID times. So 50 rupees to 10 rupees. This was, and I'm talking about small and mid caps. I'm not talking about the large caps. There might be with high quality large caps, because if you are in, and most, I believe most of the people you are with me in this call today believe in multi-baggers, and there is a difference between multi-baggers and compounders. And if you are believing in multi-baggers, you need, for you the timing is the most important thing. And if you are believer of compounders, the compounding stories are different, by like by buying HDFC Bank or Bajaj Finance. Those things are different. But if you are in multi-bagger, if you are believing in multi-bagger, then timing is the most important thing in multi-bagger investing journey. So it was so bad. I'll tell you one of the stocks. You can also comment in the comment box. I think Suresh has told. So I'll just show you. But Suresh, Reliance Power was bad fundamentals that time. I can tell you one more stock. I was tracking Rupa and Company. Rupa and Company I was tracking 2018. So it gave an exit at around these level whenever the distribution pattern happened in August 20, before this even. The stock fell down from 400 to, even before COVID, it fell down to 230, 220, 168, even before COVID. And before, once the COVID hit, it fell down more. So the so all those, so a lot of people are saying that I'm down 15-20% from that. That is still okay. But you cannot digest such falls. And I think I'll tell you what happened with the small cap index. Even let us say COVID was a artificial fall, but let us say even COVID didn't happen. The small cap index went down close to 42%. And today it is just down 10% from the top. Stock portfolios might be down 15-20%. But what happens is negative news starts flowing down in the direction of the trend. And today the direction for small cap index and mid cap index, the downtrend has just started. I'll just show you one more thing. One more thing. Hope everyone understood about the stage analysis. So stage analysis can be identified using 30-week moving average line. And let me just show you the charts. I forgot to show you the charts of small mid caps and all those charts. I'll just show you that also. So here, if you see, I think so close below 30-week moving average. Plus, if you see here, this is the, what we say, you can say it as a rounding bottom, or you can say it as a cup and handle, or you can say it as a inverted head and shoulder. It is on it is clearly telling you that stage 4 downtrend has started. This is small cap index, and how much down, how much bad it can become. See, there might be some rise. I'm not denying the fact that 5-7% rally can come. It can come at any point of time. You cannot predict it. But understand the market cycle. Equities as an asset class itself has been unfavorable for the past 4-5 months. I've been talking about that. And it was very much important for you to fix the asset allocation. Go through the last page of bull run session. I have talked about the asset allocation. In fact, one more video is there on the asset allocation on our YouTube channel. Go through that. If you have not done asset allocation till now, this is the perfect time to do the asset allocation. Now, let me just tell you one more thing. Let us look at mid cap also. So mid cap also, it is clearly telling you that the top has been made. That the top has been made. Now, on a stock specific basis, what do need to be do? Because as a mutual fund portfolio, you can completely exit mid and small cap. But as a stock portfolio, what needs to be done? On a every week basis, check first of all small cap. If you are having a lot of small caps, it is much more important for you to do, because what happens is when the stage 4 enters, you can hold only those stocks which are above 30-week moving average with relative strength. Like for example, few of the stocks are like, I don't hold it, but this is one of the stock. It's called as transformers and rectifiers. So this is clearly above 30-week moving average. I already booked the profit out of it, around 750 and 770 odd levels. It is now trading at 890. But as long as the stock is above 30-week moving average, I can keep on holding that. Now, let us say some of the stock which I have completely exited and something like that. I'll just show you. Uh, First of all, even before this, I think I've told about 30-week moving average. One more stock I'll just show you. Like, for example, I was holding Quest Corp. So Quest Corp, not Quest Corp, I think. Let me just show you this. I was holding Bajaj Consumer. I'll show you. So whenever the stock came down, even though it is in deep value, I trimmed it. So even though didn't want to completely exit it, but I at least trimmed it. Now one more stock which I'll show you is Vari. So see here, Vari. So it was the bull market leader. Now even you have got the confirmation, and especially the stocks where the valuations are very high and it is into stage 4 downtrend. Such stocks you need to completely exit it. And check on weekly basis what are the stocks which are weak. Even if I don't want to, first of all, clean all those stocks wherever there are mistakes, and clean all those stocks wherever I think there is no circle of competence. I'll just showcase about that. So I'm just telling you this concept. So if you don't understand the business, I have written a special blog on circle of competence. You can go through that. If you are not worked into any industry, if you don't understand that industry, such stocks you can completely exit down, because you'll get much better opportunities. The businesses which you don't understand, simply just cut it down. Then I talked about stage analysis. The stocks below 30-week moving average lines, you can stage cut it down, especially where the valuations are hyper on a historical basis. How many of you know this? If you can get this in screener, I'll just showcase that also. So let us say one of the stock, for that example, just take this case only, Vari. I know that it is into stage 3 already, and just look at the price to book also. Price to book is at a historical highs. Even the Vari Renewable Technologies got a exit way before, but there are few bull market leaders like Titagar Wagons. Titagar Wagons, that case which we discussed already. So such stocks, it got a exit even here, not even today. I think at it got a exit at 1,600 only. Look at the price to book. Historically it was trading at a hyper valued, so there was a exponential growth curve in the valuation were expanding exponentially. Such stocks with 30-week moving trading below 30-week moving average, you must exit those stocks, because at some point of time it will, many other opportunities will come, unless and until you have a strong conviction. And even if you have strong conviction, why is that stock going down below 30-week moving average then? It would have gone above, because even in this today's case, There are some stocks which are trading above 30-week moving average, even in this bad market. Why this stock is not trading above 30-week moving average if my conviction is very strong? Don't marry with the stock. That is what I'm saying. Hope everyone understood this. Now, circle of competence, stage analysis, valuation. So, hope everyone understood about the valuations, how to look at those. Now, I think I've covered most of the things. Anything which you know. Now, for example, so if you have any other questions, let me know, and I can unmute you. Any questions or any stock which you want me to check, but you need to speak for that. You cannot just comment in the comment box. I might miss that. So Nitish, I'll take your question.
Hi, Suyok. So yeah, I have few stocks which I would appreciate if you can check. So one is Ace Motors, and then the other one is Mazgaon Dock.
Which is Ace? Which first one is what?
Ace Action Construction Equipment.
Okay, okay. Action Construction. I think it entered in stage 4 already.
Okay.
Let me
Yeah, I
just.
can. Based on 30-week moving average, it is 1317, and now the stock is at 1228.
Yeah, it tried to bounce back from this 30-week moving average. You can wait till the weekend.
Mm-hmm.
Uh, but let us say now let me just tell you that let us say I have entered this stock anywhere between here or here. Uh, I should at least consider booking majority of my profits. So that is what my reading would be on action construction. Unless and until if I have entered here, then it it is becoming like, let us say it would be a trading bet, because as an investment there was no valuation comfort here.
Yeah, yeah.
Based on that, so at the end of the week I can just wait and check. If it is once again it bounces back from here, then I can think. But if I already made money, I'll think of considering profit book it in action construction. One more case, next.
Mazgaon Dock.
Musgao, I think it gave a exit way. Not, I think it has not yet.
Yeah.
No, it is not. Sorry. First of all, I need to check this. The parameter itself was wrong. So this is 30-week moving average. Okay. Mazgao dock is very close. So in that case, you entered 1 2 year back.
Yeah, yeah. 1 2 year back.
So in that case, you can wait till the weekend, but
Mm-hmm.
at least majority of the profits can be booked here.
Mm-hmm.
You can wait till the weekend because it tried to bounce multiple times. You can wait till the weekend and see. One more
Oh,
case.
yeah. Okay. Okay. So one last question I have is on the gold as a metal for investment, and also gold piece basically. So today, the CPI inflation data came out, and it is like in line with the estimate 2.6. But overall, if we see month on month, the inflation is increasing in the US as well. So September it was 2.44. Now we are at 2.6. I think they were estimating the effect of the elections and increased spending. But overall, what is being projected in U.S. economy is a slowdown in new house construction and all that. So U.S. economy is also slowing down. So can we expect a rise in gold prices again in
No,
future?
what the situation with gold today is, risk reward is not favorable as on today. So maybe silver has confirmed the bottom today, but gold is
Mm-hmm.
yet to. Maybe tomorrow, day or tomorrow, day after tomorrow, it might confirm. As of now, it is forming a base. Let us say I'm just opening that chart also. So if it bounces above this 2600 levels, I think it can be a good opportunity. But it needs to confirm that at least by the end of the week it should clearly go above this, so it can confirm the this thing. But overall, till 2028, I don't see any issues for the precious metals. One can keep on sipping. So, in fact, more than equities, I would like to do that in gold and silver. I've been various highly constructive on precious metals.
Mhm.
So, in SIP way, I can continue that doing.
Okay, okay. Sir, I actually entered at 2500. So based on your suggestion, so thanks for recommending this. And
Thank you.
yeah, I'm landing it. Last question is on equity stock allocation in equity itself, equity as an asset class. So, I mean, I exited most of my investments in September, thanks to you. And then I was holding cash. I'm still holding cash 20-30%. But I have recently bought initial allocation in some of the pharma stocks. So, do you think we should still wait, or
No, I
if
think we will get a lot of time. So, see, as a portfolio allocation, looking at pharma as an index, that is a different thing. But if I want to deploy my fresh cash, it is better to wait, and we'll get better opportunities in the next 6 months.
okay, okay. Yeah, I mean, I'm doing it in stages. So I've done 25-30%, and I'm still waiting for January, February to see what prices I'll get.
Yeah. So even if the market fall, pharma might fall less, but overall we will get, because if you are looking at pharma stocks, unless and until you are looking at very large cap stocks, if you are looking at it in mid caps and small cap, irrespective of which sector it is, the stocks will get beaten down. So that is the situation currently. So I think better to wait on sidelines for some time. Usually, I'm very bullish on equities, but this is not the time to what we say, go aggressive.
Okay, okay. Thank you. Those were my questions. Thank you. So,
Thank you. Any more? Anyone who wants to speak, just raise your hand. Sagar.
Yeah, hi, Suyuk, sir.
Yes.
Yeah, sir, what's your view on Paras defense? Paras defense.
No, it didn't. See, it should have stayed above this. Yeah, I would have tracked. See, in fact, we made a profit in Paras Defense and we exited. But this stock should have closed and sustained above this post IPO breakout level. If it is not sustaining, which means that there is some problem, and it is trading below 30-week moving average also. So, what troubles exactly are, you need to check that, because price action happens first, fundamental developments happens next, and even during the time when the markets were stable, it kept on coming down. So during the good markets also, it kept on coming down. There was a small news because of which the stock went up from 700 to 1600, but this is clearly a not a stock which is looking positive to me.
So, sir, can we expect some dead cat bounce in this stock?
No, I cannot say that. It is very difficult to tell.
Okay, and okay, thank you, sir.
Akshay. Yes, Akshay.
Hi Suyog, hope you're doing well.
Yes.
सर अभी एक रिसर्च कंपनी को मैं फॉलो करता हूँ. उन लोग ने जुलाई से दे हैव बीन वेरी एग्रेसिव इन सिटिंग ऑन कैश, वेरी एग्रेसिव, एंड इट टर्न्स आउट इट्स गोइंग वेरी वेल सो फार. बट एक मुझे डाउट था, कोई कंपनी है जो अच्छा अर्निंग्स ग्रोथ कर रही है, प्रमोटर होल्डिंग भी 75% के आसपास है, और उसका फिलहाल कंपनी का भी पी अगर 15 के नीचे है, सेक्टर इंडस्ट्री पी के नीचे, तो ये ऐसे काउंटर्स में यूजुअली सेलिंग कम आनी चाहिए, राइट? बिकॉज पूरा पूरा माल तो
नहीं
प्रमोटर.
नहीं नहीं नहीं, प्रॉब्लम क्या है, सेलिंग तो सब में आते हैं. अभी फॉर एग्जांपल प्रॉब्लम समझिए, वो डीप वैल्यू है, समझिए. द प्रॉब्लम विद डीप वैल्यू इज डीप वैल्यू कैन बिकम अल्ट्रा डीप वैल्यू. तो मार्केट जब गिरता है ना, तो किसी को बख्शता नहीं है. ओवरऑल सब जगह फॉलिंग होता है, फॉल होता है. बट मी एज ए इन्वेस्टर, इफ आई एम ऑलरेडी इन्वेस्टेड, आई एम वेरी कन्विंस्ड अबाउट द प्रोस्पेक्ट्स. अगर वैल्यूएशन भी अच्छा है, तो मैं ट्रिम ट्रिम कर सकता हूँ. पूरी तरीके से एग्जिट नहीं करना चाहिए, क्योंकि अगर स्टॉक डाउन ट्रेंड में है तो मैं ट्रिम कर सकता हूँ थोड़ा बहुत. बट सच स्टॉक्स शुडंट बी एग्जिटेड। तो मैं कुछ स्टॉक्स ओन कर रहा हूँ विच आई डोंट वांट टू सेल, इवन इफ दे गोज डाउन 30%, आई एम स्टिल ओके विद दैट, बिकॉज मुझे बाद में ये मालूम नहीं कि फिर से मुझे मौका मिलेगा भी नहीं। दैट्स व्हाई सच स्टॉक्स आई डोंट टच।
तो ये सर जो अभी करेक्शन जो स्टार्ट हुआ है ओवरऑल, वो एक अपना वाइकॉफ डिस्ट्रीब्यूशन चार्ट होता है ना, वही शायद आपने अभी दिखाया था।
बराबर।
तो इसका जो स्टेज 4 जो एक फाइनल ब्लो ऑफ आता है, उसके बाद एक्यूमुलेशन फेस करके अगेन बैक टू द रैली, कब ये करना चाहिए टाइम
मुझे
वाइज?
लगता है ये 6-8 महीने ओवरऑल सिचुएशन खराब रहेगा, दैट इज व्हाट आई एम एंटिसिपेटिंग। अल्टीमेटली आई हैव टू चेक ऑन अ रेगुलर बेसिस, आई कैनॉट बी वेरी स्ट्रिंजेंट विथ व्हाट आई एम सेइंग।
फेयर
वो
एनफ।
जब भी बॉटम फॉर्मेशन होगा पहले, क्योंकि अभी तो फॉल होना शुरू हुआ है।
राइट।
अभी वी आर नॉट इवन इन द मिडल, इट हैज जस्ट स्टार्टेड एंड कंफर्म टुडे। तो वी आर एट अ दिस एंड, नॉट एट दैट एंड वेयर द अपॉर्चुनिटी। तो मे बी 6-8 महीना मुझे लग रहा है ओवरऑल।
तो मतलब रेट रेट कट का तो कोई चांस ही नहीं बनता है मेरे ख्याल से।
अभी सिचुएशन ऐसा है, अगर क्योंकि फूड मतलब ओवरऑल इन्फ्लेशन सब नंबर अगर ओवरऑल देखा जाए तो नंबर खराब दिखते हैं। इफ आई डाइसेक्ट दैट, उसके बेसिस पे अगर रेट कट करते हैं तो अलग बात है, बट सिचुएशन थोड़ा इमीडिएट होने का थोड़ा डिफिकल्ट लग रहा है। इवन इफ दे डू, दे माइट बी डूइंग इन फेब्रुवरी। तो फेब्रुवरी को भी अभी 3 महीना बाकी है, एंड आज मार्केट ने ऑलरेडी ब्रेकडाउन दिया है, कंफर्म्ड स्टेज 4 ब्रेकडाउन इन स्मॉल एंड मिड कैप्स। तो सिचुएशन इज नॉट लुकिंग गुड।
फेयर एनफ। थैंक यू सुयोग एंड कीप अप द गुड वर्क।
थैंक यू, थैंक यू। भाविका।
हेलो।
यस।
सर अभी निफ्टी 200 लेवल पे है, ईएमए पे है। तो हम लोग अभी इस पे निफ्टी 50 के स्टॉक जो है वो एसआईपी कर सकते हैं क्या अभी, अगर करना है तो?
हाँ, एसआईपी तो कर सकते हैं, एसआईपी आप कर सकते हो। और एग्रेसिव
तो
एसआईपी तब कीजिए जब 30 वीक मूविंग एवरेज के ऊपर इंडेक्स चला जाता है फिर से। तो अभी
ओके।
स्टार्ट कीजिए, और वो डबल कर दीजिए एसआईपी जब वो एक डाउन ट्रेंड के बाद अप ट्रेंड में फिर से जाता है। तो आपको करना ही है
ओके।
तो कर ली। अभी तक किया नहीं है एसआईपी, तो आप थोड़े अमाउंट से स्टार्ट कीजिए, अभी तक किया नहीं है। बट एग्जिस्टिंग एसआईपी बंद मत कीजिए, दैट इज व्हाट आई विल से। फ्रेश एसआईपी नहीं स्टार्ट करने की कोई जरूरत नहीं है, अब अभी तक मैंने नहीं किया है तो।
ओके। ओके, नहीं एसआईपी म्यूचुअल फंड में चालू है सर, लेकिन स्टॉक में अगर करना है मुझे, तो इज दिस
स्टॉक्स
राइट
में
टाइम?
स्टॉक्स में करने के लिए आप अगर वेट करेंगे ना 30 वीक मूविंग एवरेज से जब बाहर आएगा, क्योंकि आपने अभी तक
ओके।
शुरू नहीं किया ना, तो उसके
हाँ।
बेहतर ये है आज का एसआईपी का जितना अमाउंट है आप लिक्विड में कीजिए, करते
ओके।
रहिए। और वो इंडेक्स
ओके।
फिर से आने के बाद 30 वीक मूविंग एवरेज जब भी वो शायद लार्ज कैप में तो कर ही सकते हैं, विच इज बेटर देन स्मॉल कैप। तो वो जब भी
ओके।
ऊपर जाए ना, वो शायद अगले हफ्ते जाए या अगले महीने जाए, तब से आप
हाँ हाँ।
एग्रेसिव एसआईपी शुरू करिए।
ओके सर, ओके, थैंक यू सर, थैंक यू।
बट ओवरऑल अगर वो नहीं जाता है और अगर हम डाउन ट्रेंड में बड़ा लार्ज कैप में भी डाउन ट्रेंड जाते हैं,
हाँ।
वेट करने का इज अ बेटर वे। एंड फिर से जब 30 वीक मूविंग एवरेज के ऊपर जाता है तब यू कैन एग्रेसिवली स्टार्ट सिपिंग।
ओके सर, ओके सर, थैंक यू।
विश्वनाथ।
Hey, hi. Hi, Suyuk. Thank
हाय
you
विश्वनाथ।
for giving me the opportunity. My question is on Cochin Shipyard, but at a fundamental level, actually. So, with Trump coming in and you anticipate an Indo-US security dialogue and all that, so do you think these defense stocks will be back pretty soon, or should we still wait for the fall and then back in? And typically, how this F, FDI cycle works also in this? And then on and related to this is on Cochin Shipyard. Do you think is it still down by below the 30 moving average? And I think it's about time we sell it off. I bought it
So
kind
the
of
the
sell 6 months
situation,
before.
yeah. So see, first of all, I don't have fundamental view on coaching shipyard, so I won't be able to comment that. You know better
Okay.
you know it better, you if you have studied it. So if you the concern is not fundamental, the concern is valuations today. And
Right.
because it is, if the stock is like, for example, I'm very bullish on transformers. And
Right.
the concern
Okay.
is never on Trill as a stock or as a fundamental, but the concern is
Right.
valuations. So looking at the valuations, I just exited. In fact, I exited even before the 30-week moving average happened, because I saw that the valuations where it was trading at 2029 valuations.
Right. Okay.
And here, if it is trading at 2029 valuations, and if
Hmm.
there is a stage 4 downtrend, because
Hmm.
it earlier happened in January 2023, and then the numbers were not there. The numbers came in later, and after coming the numbers, it is trading below 30-week moving average line. So if I am already holding it from 2020, 2021, 22, this is the time to be play a very caution. And if I am having, because what happens is, even defense, I think, is a structural story. I don't think
Yeah.
it is a cyclical story, because it is, if you go through my multi-bagger framework which I have posted, defense is a
Right.
sector which is into structural story. And if I am
Right.
looking at from that angle, I need to look it from the monthly charts or 3 monthly charts. But it also
Okay.
depends upon Cochin Shepherd, how big is my position in Cochin Shepherd to my entire portfolio. That also
Okay.
helps me to take a decision. So let us say Cochin Shipyard, I already made 6x, 7x, and it is already a more than 20% of my portfolio. It makes sense for me to at least cut down and preserve some of the profits. So
Okay.
the decision needs to be taken on that basis, not on the basis, because ultimately fundamentals and all those things can be good. But what my need is also much more
Right.
important.
Okay. 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 So my in terms of allocation, I have most of it on three things: ETFs, metal ETFs, and commodity ETFs, and Reliance basically. So these three are my majority of it, and rest of it I've exited
Like that.
long back.
Thank you everyone for joining in. Hope this helped. I completed the session in 1 hour and call your questions. Hope this helped.